This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining us today is Paul Welch, the CEO of Nostra Terra Oil and Gas. Thank you very much for your time. Paul, how are you?
I'm great. Thanks for having me on today. I appreciate it.
Now, it's good to be talking to you. Of course, this morning you announced a fundraise there, raising £500,000. This is to help increase production further from the oil fields there. So, I mean, first of all, just on the fundraise there, people might be a little bit miffed. I've seen some comments that it was at a bit of a discount. Could you make a comment on that?
Yeah, I mean, again, first of all, predicted stock price is always tricky, as you know. We priced it, the day before it went out, and the shares had been down for almost a week after we put out what we thought was a fantastic announcement. So the shares have been down. We priced it, we sold it, and then the shares on the day of really took off. So, we think we'll be back there. It's just one of those unfortunate timings. We didn't want to do another severely, heavily discounted offer, but we had to, and based on that day's price. The previous day price, the discount isn't substantial, but it's a discount nonetheless. No more discounts. No more. We don't have any more fundraisers planned. When we did the first one, back in July, it was always kind of phase one, phase two. We needed about a million pounds to kind of get where we wanted to be. And so this was phase two of it, and now we're done. So once we deploy this capital, then we'll be in a really fantastic shape. So hopefully we can talk more about that rather than the discount that we had to go out at. So but the markets, as you guys know, have been tough. They've been really challenging. So anyway.
Yeah, sure. And of course, the share price was moving yesterday. I know an interview did go out that I did with Gervais, and that may have had a bearing. I don't know, but obviously, if you've been working on the placing,
I mean, Gervais is supportive. He's a great shareholder. He's in our stock. He participated in this last raise. So
okay,
it's good to have him on board. I think he made a comment on one of the interviews you did that he expected a lot out of us, and we intend to deliver. So
okay, well, it's good to see that. Good to hear that he's supported again. Then that's good. I do plan on having a catch up with him before year end. But interesting that you said no more discounted placings, and at the moment anyway, you don't need any more because again, I know that companies had history. I don't want to dwell on it too much, but a few things I've seen this morning it feels like Groundhog Day, yet more placings at discounts. Where's the money? So, I mean, is it Groundhog Day or are we actually turning a leaf here, Paul?
Yeah, I think we turned a corner, I think, with the first raise. So the money that we raised went straight into the ground. We increased production, by 30 barrels a day. That's generating revenue. This next raise, the raise we just did is going to hopefully put another 50 barrels a day on top of the 30 that we already have. Okay. And so, the money's going straight into the ground. It's not going to overhead. It's not paying anybody's salary. It's going straight into, tubular, steel, workovers, things that make the company money. So it's going focused on revenue generating things. In the past, I don't know what the money was used for. It obviously wasn't done very effectively, but we're only focused on generating cash, right? So the purpose of this is that first raise, we got 30 barrels a day. We're profitable. We're making money again, which is what we should be doing as a company. This raise, again, if we get what we anticipate, which is another 50 barrels a day, that increases our profit and our cash flow by almost 5x from where we were, right? So, when I came on board, we were loss making. Now we're profitable. Now we can really accelerate that profit because once we hit the break-even mark, then everything is basically profit. And, we have a very large net back of, almost $50 a barrel on average across the company. A place like the Falk area where the operating costs are, in the neighborhood of, $2 to $3 a barrel, obviously our net back is larger. In Pine Mills, our operating costs are, in the average of $25 to $30 a barrel. At current oil prices, we make almost $40 to $45 per barrel in profit. So every barrel that we add is a very profitable piece of business for us. So, when people think about their investments, return on capital, that sort of thing, the internal rates of return, given what we anticipate are, in excess of 100%. So, this is where we need to be spending our money. Now, I don't like taking discounted shareholder cash to do that, but the people that are in it now are really going to benefit from my perspective. So, we're really driving it hard to get that cash flow up, and that's all we're focused on.
Okay, good. So you say that your break even sort of roughly at the fork is about $2 per barrel, and at Pine Mills it's $25.
Yeah, 25, 30. Yeah.
Yeah. Okay.
Yeah.
And you announced recently, of course, you spoke recently, didn't you? And you announced that you were sort of in the region of, that was it 1.5 million at the moment on a profit line basis.
Well, that's not a number that I came up with. So, what we said is that when we increased our, we felt we added about $500,000 in profit when we added 30 barrels. And, now we're adding another 50. So it doesn't directly scale. It kind of accelerates a little bit. So the number you have is not far off, but, it depends on oil price and a few other things. So, and also,
Right.
I don't want to get too pinned down on that, but yes, we're profitable. Yes, the number you give is in the ballpark, right?
It's in the ballpark. Okay,
yes.
okay. And
So
and
you're very good
for
at
that,
math, put it that way.
well, I don't. Yeah, maybe. And on the 500,000, then just thinking on sort of, I know you can't compute it exactly, but what return? For 500,000 investment, let's say, what return could you sort of anticipate from getting into deploying those funds and getting that extra 50 barrels of oil per day?
Yeah. We're gonna all that will pay out within a year. So I think our payout time is about 8 months for that. The rate of return across the because it's a number of workovers on average is above 100%. IRR. So that's the kind of magnitude we're talking about. Because again,
Right.
we're onshore Texas. The wells exist. What we're doing in a lot of cases is that we've had some corrosion issues or something. So we're going in, running a new string of tubing, doing a new pump in the well, running some new casing. We're not drilling a new well from scratch. The infrastructure's there. So as soon as we complete the workover, which takes a week, boom, we're producing oil straight away. And I mean, we're and these wells, they don't come in at huge rates, but the first wells came in on an average of 6 barrels a day. These wells are a little more challenging, and so they cost a little bit more. And so these come in now at about between 6 and 15 barrels a day, depending
Okay.
on the well. So we'll see. But again, there's no exact science. A lot of these wells have been shut in for a couple of years, and so we're returning things to production that haven't been producing for a while. When the field was originally purchased in 2019, it was making right at about 110 barrels a day ish, and we think we can get back there, if not above that. So our target now is to make when we add this 50 barrels a day to be under about 125, 130 barrels a day for this. Now it'll take some time to get there, but that's our current target.
Okay.
And I think what I've said when I spoke to you before is that we haven't seen a sustained investment program in this field for 5 years, and so the best place to find oil is where you're making it, and so that's really what we're doing. It's pretty simple.
Okay. Okay. So yeah, an IRR of just about under 100%, something like that. So potentially in the ballpark, maybe of adding about $1 million to the bottom line.
Yeah, something like that.
Something like that. Okay.
I think you're in the right neighborhood. Yeah.
Right. Okay. Good. And I mean, so you said earlier then about thinking that investors could do sort of fairly well from this point here. The market cap, I presume, is probably circa $1 million around there at the moment here. So just thinking on some of those ballparks we've talked about there. I mean, you can't make share price predictions, obviously, or market cap predictions, but what would be?
Well, I mean, again, let's just put in perspective. The market cap is probably around £1 million. Based on what you just said, we're going to probably generate more than that in profit, in the next year. So, I mean, again, if it just re-rates to a normal, rev to kind of share price, it has to re-rate. It really does. And again, our job here is, one, to generate the cash, two, to tell the story. We get to get out there, talk to you, talk to other people, get some publicity for what we're doing, because we think we have a good story to tell. It just hasn't been told in a while. But I think it should get back. We say this. We're kind of close the gap. So at the moment, we have a 10x gap to close. The value of the assets we have is north of $10 million, and we're right around $1.3 million of market cap. That has to close. I mean, it really has to close, and then that's what we're shooting on. So So we're closing the gap, we're minding the gap, and the gap is what we're focused on, right?
Okay, good. And is that sort of what's driven as well, perhaps your direct participation in the placing, and of course other directors as well?
Yeah, so our biggest shareholder, is Jim Newman, the guy on the board. He participated, I participated, Steve participated. So yeah, so everybody's all in on this. We can see the potential. We're not going to ask investors to put money when we're not putting money in ourselves. So we're excited about the return. We want to see a significant uplift. You had an interview the other day where one of our shareholders said that he expected between a 2 and a 5x uplift. Okay, I mean, again, we'd love to see that. Those are the type of things that I think people should get excited about. Will the market give us that? I don't know, but those are the type of things and the reasons that we invest in these small companies, because they do have the ability, to really take off, once they're run properly, and we think we're running it properly now.
Good. Well, I do want to talk to Jim at some point, get his perspective as well. I know he's got a big interest, and he's on the ground, isn't he, as well, doing a lot of the sort of the work for you there. And just finally, Paul, if I can, you say about 8 months you expect this workover program to be completed?
Oh no, we'll be completed this workover program by the first quarter next year for sure. I mean, it's 5 wells. I mean, again, so we expect it'll take a little bit longer than that to see all the benefit from it, but the work itself will be done in the first quarter next year. Yeah, we're going to get started on it straight away. So.
Okay, good. Well, thank you very much for your time. As always, Paul Welch, the CEO of Nostra Terra Oil and Gas.
All right, thanks for having me on. Appreciate it.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.